All right, let's go. Friday, TGIF. We got the jobs report out today. Up 75,000 on payroll, so that was below the expectation. I sent out my forecast yesterday. I called it at 155K, so it was about half of that, but the point is I called it below consensus. But let me tell you, the data on my side was very strong, and I think that showed up in the average hourly earnings. That was up 6 cents. Now that was kind of portrayed as a negative by the media. What else is new? Media always negative. But 6 cents is the second largest increase, monthly increase in wages so far this year. April had the largest increase of 7 cents. But both April and May, the increase in wages, you have to go all the way back to November 2018 to see a similar increase in wages. So remember, April and May, and particularly May, we had the big correction in the stock market. We had Trump saying he's doing the full tariffs on China. The whole China deal fell apart. We had the Mexico tariff announcement. We had bond yields plunging and everybody saying there's going to be a recession. So we had all this negativity. And we had the second biggest wage increase this year. And you have to go all the way back to November 2018 to see wage increases equal to April and May, despite all this so-called negativity. Okay, now wage gains at 3.1% year over year, rising much faster than the inflation rate, which is around 2%, 2.1%. And if you look at the relationship between wage growth and inflation, anytime you have a period where wage growth is above inflation, you end up having a convergence, meaning that inflation rises, all right? So again, there's that question mark hanging over the bond market. But with respect to the, by the way, let me just stop for 1 second and just mention, if you don't already know, stock market is up 300 points. All right, we are on our way once again. S&P 2900. I told everybody, as a matter of fact, exactly 1 week ago, on Friday, last Friday. All right, May 31st. When everybody was panicking and selling and saying we're going to see another crash like 2008, I said all last week, you got to buy into that dip. We had people posting comments saying, Mike, you don't know what you're talking about. This is going to be a crash like 2008. You're leading the lambs to the slaughter. And I kept saying, you got to buy into that. There's going to be support coming. And principally from, again, what I talk about, and in my part of my main analysis are these bank reserve flows. I'm the only one who does that, and that's an insight that you will not find anywhere, even from the other MMT people. As a matter of fact, they get that, they ignore that, or they get it completely wrong in their understanding. Now, so we're up 300. Let me talk a little bit about, the dollar is down today, of course. Oh yeah, I was talking about bonds. The thing about bonds, which is so, I guess disturbing is a word, or interesting, you know, like the old Chinese saying, may you live in interesting times, is that the debt ceiling is causing this squeeze. And who knows how low yields can go, because as I've said before, since system reserves, bank reserves are coming down, that's all being engineered by the Fed, and now the government, the Treasury cannot issue new bonds. You have this squeeze that banks must own tier 1 assets to meet their regulatory requirements and stress tests. So they're being forced to buy bonds as reserves come down. But there's no new issuance, so this is like the perfect storm. I mean, you could have yields continue to drop without any connection to any kind of a slowdown in the economy. Now, I'm going to throw in here something very interesting. The fact that since April 1st, when gold was reclassified as a tier 1 asset, gold becomes a treasury alternative. All right? So banks are allowed to own gold as an alternative to treasuries. Very interesting, because if the debt ceiling continues and these idiots in Congress don't raise it, I mean, the banks might decide to add gold, especially the central banks. The banks might decide to add gold as an alternative to treasuries. So you have this very interesting scenario developing, and I think that's one of the reasons why we haven't seen any pullback in gold. I mean, prior to this recent rally, prior to April 1st, 2019, every time gold has had a sharp run-up, what happens? It has a sharp correction. We haven't seen this so far. I'm not saying this is an ironclad phenomenon that's happening, banks buying gold, but it's a very interesting scenario given what is happening with the debt ceiling and treasuries and this kind of technical condition of the market, reserves coming down, etc. Anyway, all this stuff is in my report, as always, MMT Trader. Go to my website, pitbulleconomics.com. I was right on this, of course, with the rebounded stocks. We're going to go to new all-time highs. I've been telling you guys this. All right, have a great weekend. Bye-bye.